So what's cool about HR is that it's the backbone of how money really moves in the United States. So many Americans specifically are living paycheck to paycheck. Clair's created an innovation to solve this through lending.
Why did you decide that this was going to be a partnerships-led motion?
It made more sense to outsource. I think most large platforms are moving in this direction. I think it goes back to this whole embedded fintech movement. I think there's a huge opportunity in embedded finance to really help those small business owners.
My name is Nico Simko, and I'm the CEO and co-founder of Clair. I'm also the co-host of HR Tech Trailblazers. In this podcast, we look at everything that the HR tech space has achieved and all of the new things that are coming up. Today, I have an incredible invitee that's with us, Jeff Forkan. Jeff Forkan leads fintech partnerships for Gusto. For those who don't know, Gusto is the leading payroll and HR software for small businesses in the United States. Jeff Forkan has an incredible background. He previously was a senior director at Currency Cloud, where he tried to remove a lot of friction in international payments. Today, he works across multiple product teams within Gusto to try to find how some innovation that they want to unlock can be built through partnerships. So we'll start with one question. What do you think is the number one inefficiency currently taking place in payroll?
Thanks for having me on. Super excited for you to start this podcast and appreciate the excellent intro. So I guess it would maybe make sense to take a step back, right? Like, we know payrolls, there's inefficiencies, right? But like, my background, I got into payments through a company called Finastra, which is basically software for banks to process ACH and wires. And this was probably 2016-ish, before this whole fintech thing really got going. Crypto was, no one wanted to even hear about crypto. But I noticed like, it was clear that there was so much inefficiencies because I was looking behind the scenes. I was providing the software to the banks. I could see how they were actually processing payments and how they were keeping track of their records, and it was very scary. The reason that we have inefficiencies in the US is mostly because of our payments infrastructure. That goes back to the Fed and NACHA and all of these organizations that actually create the infrastructure of how we move money. It's also very hard, and so going back to your question about payroll specifically, I think we're stuck on this 2-week pay cycle thing because that's the way it's been done, and business owners don't want to have a liability every day. Like, ideally, we could get to a point, which is what Clair is solving, is on-demand pay, right? Or earned wage access, whatever we're calling it today.
Yeah, I think on-demand pay is the term that we're landing on.
Yeah, I like that one. That's much better. And that's what we've worked together on with Gusto. We're calling it on-demand pay. There's no way for an employee to get access to money instantly or daily or even weekly if it's not possible. So I think that's again, and Clair's created an innovation to solve this through lending, which is crazy that we have to go through all these hoops because of the way the system just works.
Yeah, let's talk a little bit about on-demand pay here for a minute. Why do you think, from a consumer standpoint, an employee standpoint, on-demand pay is so important?
Yeah, I think it goes back to the fact that so many Americans specifically are living paycheck to paycheck, right? It's unfortunate, but it's true. I forget what the statistic is. You probably know. It's like 50% plus, right? Of folks are living paycheck to paycheck in the United States, and you need to get groceries for your kids. There's always, I have 2 children, there's always unexpected expenses popping up when you have kids, let alone you have a flat tire. You could take out a credit card, you could put it on a credit card, but then maybe you're not great at budgeting, and so then you end up having credit card debt. Why? It's a better option to just get paid when you need to get paid.
Exactly, and maybe to double down here, you work at one of the leaders, if not the leader, in small business payroll in America. Why did you decide that this was going to be a partnerships-led motion instead of hey, we're going to try to build this ourselves, or some other providers have just decided to offer a product on their marketplace?
Yeah, it's a great question. So I think you got to, again, go back to the history of payroll, right? And when Gusto, specifically about Gusto, but I think it goes back to, it's really for all payroll companies, they weren't payments companies. They weren't banks. They actually weren't regulated. a lot of people may not know this, but like payroll was exempt from money transmission licenses, I think until 2017 or 2018, at which point a few states decided that specifically because of fintech kind of exploding and seeing that there was these new payroll companies such as Gusto, such as Rippling, name a few more, Oyster, et cetera, Deal, Remote, that, hey, we need to look into this. You know, there's all these kind of payroll tech companies that are moving money. They're not regulated. And so I think it was Tennessee and Texas were some of the first two states to start finding payroll companies. So yeah, I think that's where we've gotten to this point where payroll companies just actually were more software. Like we're an HR and software company at heart, right? We happen to move a lot of money. And so for us, it made more sense to outsource, especially a complicated financial instrument such as on-demand pay, to a partner that's all they do. You guys are, Clair's laser focused. We do this with other products too. And I think most large platforms are moving in this direction. Financial products are super difficult. Even a bank account, like there's just so much overhead that goes into that. So if it's not our core thesis of what we're trying to achieve, and it's not at Gusto, right? Like we are the people platform for small business owners. So it makes way more sense for us to outsource it to the experts.
Maybe to double down on that, Gusto went all the way down to deciding that this is something that needed to be fully embedded into the experience so that there was no separate application. Like we built the entire experience within your application. We made sure that consumers very clear that this was a product offered by Clair, but it would really seamlessly integrated. Why do you think that was where, from a product strategy, again, like Gusto landed versus a marketplace or another option? Why do you think that's where it landed from a product strategy standpoint?
Yeah, I think it goes back to this whole embedded fintech movement and what I've called headless banking.
Yes.
I don't think it's right for everybody, but Gusto specifically, I think a lot of tech companies it's really important that you control the user experience. You don't want to have this disjointed, leave my platform to open your bank account and all those other things. And so that was a top priority for Gusto in choosing a partner was, all right, let's find a partner who has the chops, the tech savviness to embed this thing. And quite frankly, there really aren't that many. There's maybe 2 or 3 potential partners in the on-demand pay space that would even have the ability to do an embedded partnership. So yeah, I think it comes down to the control of the brand, the control of the experience, and this is where banking as a service and all these sponsor banks such as Pathward and others, why would you don't want to be the face? Why not have Gusto be the face? We already have the customer base. So let's use our brand, let's embed it into our product, and we can package it that way. And we should be able to see better adoption for the solution. Also create a better experience.
Absolutely. Well, let's keep talking about better experience. You and I have talked a lot about this. What do you think are some of the products that will come out of this level of maturity, of this growth in the embedded fintech space?
Well, I can tell you one that I'm thinking about, and I'm excited about, is the SMB has always been the most underserved customer when it comes to finance in general. I think you talk to any banker who's been in the business for a long time, especially in commercial banking, they're like, yeah, we don't want to deal with small businesses. If you're not doing 5-10 million in revenue, thanks, goodbye. Because it's so expensive to underwrite the business. There's risk, right? And quite frankly, the banks don't have access to the data to properly underwrite small business owners. And they're high risk. They're kind of like a consumer in some ways. So I think there's a huge opportunity and for Gusto specifically, I'm excited, is how do we bridge that gap? How do we help small business owners get access to the capital that they need to grow their business, hire more people, and ultimately drive more revenue? Which is good for Gusto, but it's also just good for the entire economy if we can get more small businesses up and running. So I think that's where I think there's a huge opportunity in embedded finance to really help those small business owners, and I'm excited about that.
And okay, that makes a ton of sense, and I really echo what you're saying. Like I've had the chance to interview a lot of small business owners, a lot of managers on the front line of those small businesses, and I completely agree with you. I think that there's an enormous opportunity to, with the right technology, with the right level of like one-stop solution, to build a lot of things. So let's, maybe for the audience here, one of the things that would be super cool is in your role, how do you select the right partner?
Basically, what happens is it's going in and charting out that landscape and saying, here are the top 5, 10 players in embedded business lending. And then it's meeting with the founders, such as yourself and others, and just getting to know them. For us, for Gusto, it's definitely a chemistry thing, I think. I mean, obviously we do due diligence, and we want to make sure that the company has strong financials and they have strong compliance and all that. And then from there, it's about, hey, do they have the mentality that they really want to get in the weeds with us and get their hands dirty and do something truly innovative? And are they committed to that? So those are the key factors I think that we look at when we're choosing a partner. But since SVB collapsed and all that, there's also so much to look at in terms of who are their bank partners. Okay, cool. You're fintech. You're doing this embedded lending thing, but what's the underlying foundation, and is there any shakiness there? Because not just SVB. I mean, let's talk about Synapse, right?
Yeah. If I'm reading this back to you, you're like saying, like, look, we have a strategy. We need to find the right partner, and importantly, for the long run, they need to have the same chemistry. But now the due diligence includes the infrastructure behind the infrastructure player. What is the licensed entity? How are they doing? How do you see the space evolve? Do you think it's going to be more and more scrutiny, less and less scrutiny? Do you think there's going to be a flight to quality? Where do you think this is all going to play out over the next few years?
Yeah, I don't think there's going to be less scrutiny. I think there's going to be more. I think there's always more regulation, unfortunately. Unless this election, whatever happens with this election, I don't know. Elon's talking about the Department of Government Efficiency. So perhaps maybe regulation goes down, but I wouldn't bet on that. I would say we should expect more scrutiny in this embedded market. The Synapse was kind of the first really straw that broke the camel's back, if you will. And the regulators, I don't know, I think every sponsor bank at this point is thinking that they might come under OCC consent order. And so they're all preparing for that. So yeah, I think it's going to continue to increase as regulators want to make sure that they are in control and that things like Synapse don't happen again.
Yeah. So you made a decision when you chose an on-demand pay provider to go with, I would say, a non-traditional provider who basically said, this is a licensed, like kind of lending activity. Yes, it is a wage advance. Yes, it's a wage advance agreement that is produced, but it's not between us, the fintech, and the consumer. It's between a national bank and the consumer. Talk to me a little bit about that decision and what has happened maybe in the months after that, and how you feel about that decision today.
Yeah, for sure. I think I know where we're going with this. Definitely, like when we were looking at the market of on-demand pay providers that we could potentially embed to Gusto, that was one of our qualifications. Is like, hey, let's find another a partner who is also working through a bank, because the regulatory landscape, specifically with on-demand pay, was so opaque. And you guys in Clair had such a wonderful understanding. There's a huge differentiator, I think, for Clair, was that you all were embedded with literally with Congress and trying to help them understand what the hell earned wage access was, because a lot of people still don't even understand it. So I dug in deep. You and the team at Clair helped me educate me as well on what was going to happen, and we've seen it play out now in the last few months, which was a good validation for our decision. Made me look good. Thank you.
I'm glad.
Is that basically you could probably explain it better than I, but the governments, states are starting to decide that this is lending, earned wage access, on-demand pay, whatever you want to call it. It is a lending activity and it needs to be regulated as such. And so you have some of the other players that have been in the market forever that aren't regulated. They don't have any licenses. they don't even have MTLs, right? Maybe they have some MTLs, but they definitely don't have lending, I don't think. And so they're all kind of scrambling to figure out what the hell are they going to do.
Yeah, really appreciate that. Well, let's shift gears a little bit into another topic here, which is I know from a consumer standpoint, you're deeply passionate around how their financial life is going to evolve with one better innovation on the fintech side, but also fintechs and HR tech providers working more closely together.
Yeah.
So what are the things beyond on-demand pay that get you really, really excited in the fintech and HR tech space for consumers?
We were speaking before we jumped in here, but there was an article that was put out by the Fintech Blueprint, which is like a Substack letter. And it was basically saying that there's a $100 billion opportunity in the HR tech space for fintechs to come in and either embed into HR or for HR tech to take the reins and just go after that market themselves. Specifically because the CFO suite's like not enough. You can like Brex and Ramp and these others, they've built great products, no dig on them, but they're just addressing expenses and bill payment mostly. And they're speaking directly to the CFO and the finance teams at organizations. So they're missing the broader picture of an organization, which is including payroll and employees and how do employees get paid faster. And so what's cool about HR is that like I didn't realize this until I got into payroll and HR, but like literally it's the backbone of how money really moves in the United States, right? And so if you are the HR company, you could actually create a closed loop network. Mm-hmm. If you've got the employer banking with you and you've got the employee banking with you, now you can open up to amazing innovative things because now it's just data.
Yep.
Money doesn't even have to, you have your own clearing and settlement network. Mm-hmm. You bifurcate the need to have the banks aren't involved, the ACH network's not involved, MasterCard, Visa doesn't have to be involved. I can create whatever the hell I want if I'm banking both entities, the employer and the employee. So that's what I'm super excited about. I think that's where it's going to go. Mm-hmm. And then I think, and one thing I've been thinking a lot about is on-demand revenue. Mm-hmm. We have on-demand pay. Mm-hmm. What's the flip of that? How do business owners get paid more quickly? And what I've also realized is like it's always about getting paid faster, right? But if I can tell you I'll pay you faster, you'll pay me for that.
Yep.
You're willing to spend money to get the money faster. And so we've got on-demand pay. You guys have solved that really well, and I want to solve on-demand revenue and that's the access to capital thing for small business owners is, they've got net 30, maybe 60 invoices, right, out there, and they're just waiting to get paid, and they can't progress their business. They can't pay their bills. They can't buy more inventory to grow because they're just waiting to get paid.
Yeah. What do you think HR tech can do to make small business lending more efficient? What's a differentiated data play here?
Yeah, it's a good question. I've been thinking a lot about that. I don't know that, to be honest with you, I don't know that HR has a much better data. Mm-hmm. It's the same data. It's what's your cash flow? I need to see your invoices that are coming in. I need to see your average balances. It's banking. We're not necessarily inventing any wheel or coming up with some secret sauce. Mm-hmm. I think it's just the fact that also on top of that, there could be a play here though. When I've talked to a few of the credit bureaus about this just high level, but why aren't business owners getting credit for making payroll?
Right.
It's the largest expense by far of every business owner, and you get no credit for it. There's also cool, like we're in the Built office right now,
yes.
I think, right?
Exactly.
And Built has this awesome credit card, right, that allows consumers to build credit and also get rewarded just for making their rent payment, which is their largest expense. We all have to pay housing. That's our largest expense as a consumer. So you just, again, flip that. Why don't businesses why can't they get rewarded or get some sort of credit for making payroll? And so that's where there's some innovation that could happen, I think. We're not, I think that's a ways off. The credit bureaus aren't super receptive right now.
Absolutely, but I think you're onto something here. Well, maybe let's wrap it up with this: is if you had a crystal ball, and you could fast forward, call it to 2030, what do you think is a predominant fintech product, either on the B2B side or the consumer side, that will exist, that today is maybe adopted, but not really, and that will become table stakes? So you have a crystal ball, 6 years from now, what do you think is that feature that's going to be available? Everybody's using it, but they're not really using it today.
Yeah, it's a good question. There's so many ways to go. Well, I will say, like, I think on-demand pay, instant access to your money, right? And maybe it's every direction. It's not just to employee, it's to employer too. So like, again, today, there's so much friction and slowness in the plumbing of how money moves, and I think there's also, crypto could disrupt that as well. We're hopefully on the verge of another moon in crypto any day now, and so I think that adoption is going to continue to happen. I don't see this going backwards.
Yep.
From where we are today in the crypto adoption cycle. So I think the combination of crypto and the combination of just everyone wanting to get access to their money more quickly will lead to the future where you shouldn't have to wait 2 weeks to get paid. It should be as soon as you punch out, or daily you get your account balance topped up. And the same thing goes with invoicing. If you want to get your invoice paid instantly, you should be able to get that. So yeah, those are just some ideas.
I love it. Jeff, thank you so much for joining us. Really appreciate it.
Thanks for having me.